This is the Business Day exclusive. My name is Elizabeth Musa. Today I'll be speaking with the head of Africa regions for corporate and investment banking at Standard Bank Group, and she'll be talking all about West Africa and Africa's capital market as we continue to move towards global advancement. Today is all about conversations that drive us to the next level. Africa is certainly taking a rightful place in the global market, and this is where the conversations happen. All right, thank you so much for joining us on the Business Day exclusive today, Anne. It's really nice that you decided to join us this afternoon. It's truly a delight and an honor. Thank you so much.
Pleasure meeting you. Thank you.
Yeah. So you've walked across global and African financial markets for over 3 decades now. What's the perception like about West Africa as an investment destination for this period of time in which you've worked in the market?
It's an interesting question, and as I reflect on it, 3 decades is actually quite a long time, and in that period we've been through different cycles. At this time, however, when you consider the geopolitics, when you consider the evolution of the economies across the world, at this time West Africa and Africa is truly attractive from an investor perspective. And why is that? It's the demographics. I mean, if you take Nigeria, for example, you know that 70% of the population is between the ages of 18 and 30. That is a long-term indicator of success for certain sectors. West Africa, there's been economic reform in Nigeria. As Nigeria rises, it brings and pulls the rest of the region. So demographics, market reforms, economic reforms, and an opportunity to sell into a young, active, vibrant market that consumes products.
And when you engage with international investors, what do you see as their view of West Africa? Is it like cautious interest, or are they really optimistic about where we are?
I think it's a bit of a mix. So a couple of years ago, I'd say there's a lot of cautious interest, and that was as a result of the volatility the larger economies and perhaps scale in some of the smaller ones. But as a result of a lot of the reforms that we've seen, the confidence of the domestic investors and businesses, there is quite a lot of optimism. And you see it in the volumes of trade on the exchange here in Nigeria. You see it in the support foreign portfolio investors are giving to the currency. I would say it's actually quite cautious, but with realistically cautious. This isn't a speculative interest.
Mm-hmm. I like how you call it realistically cautious. I'm not sure I've heard that anywhere else. But we also see that many West African economies still rely heavily, on bank financing. What needs to change for capital markets to play a more meaningful role when it comes to long-term funding?
Yeah. To be fair, not only the West African economies that rely on bank finance. That's prevalent across the African continent. The South African economy has the most developed and the deepest financial sector. As you move north, some of the North African countries do, then we're really talking about Nigeria. One, I think it's adding to it. The bank financing does have a very real role to play in investment, in supporting the development of clients and businesses. But when you look at the pension sector, the ability to attract those long-term funds into both infrastructure that's being developed and the reliability of both dividend cash flow and capital gains on the exchange. I actually think that the exchange in Nigeria has been phenomenal this year and is a great example, an indication of what can happen. What we haven't seen happen to a great extent, however, is the investment into the private sector businesses. But we look around Nigeria in particular and you can see the growth of funds. And the funds are doing that, investing into equity.
And let's talk about your experience when it comes to structuring capital market and project finance transactions. What typically differentiates the deals that reach financial close from the ones that stall?
Preparation, experience. So a greenfield new business with someone who's never done it before, they are likely to stall more than new businesses by an experienced business person or entrepreneur. Access to financing at the right time. Because you can have a great business and the lack of capital delays the implementation, or you have insufficient capital. That can stall any new startup.
So let's talk about blended finance now. We see that it's often positioned as, a key solution to Africa's financing gap. But where is it working effectively when we talk about praxis itself? How is it working effectively?
We've seen a mixture of blended financing. When I look at blended financing over the last 30 years, it's actually been around for a while. It's really a blend of your development finance institutions, your pension sector, and your commercial banks. Now, commercial banks, they look for a certain type of returns. Your development finance institutions are able to provide financing for a much longer period, much longer tenor, which influences the cash flows, because you're paying back a little less each year, notwithstanding the fact that over a period of time, you actually are paying interest on the money that you borrow. When you blend the two, very long-term financing at attractive rates, the more commercial financing, you just get a rate that makes that is far easier for a company to absorb. Now, you're asking where we've seen it work. We see it work quite well in the infrastructure space, and you see a lot of private sector entities going into infrastructure. Some of that is energy generation, and more increasingly, we're seeing it in the logistics sector, ports and other transport. Quite a lot of blended finance there. And finally, we do see blended finance lending conservation funds together with commercial funds in order to enable long-term investments.
My final question for you, because I know you have to run, we'll be looking ahead. Where do you see West Africa, when it comes to being very competitive, as a destination for investment, globally? What do you think needs to be done as we look ahead?
What needs to be done to make West Africa competitive globally? West Africa is actually already quite attractive. I think I started off our discussion with saying, at this moment, at this time, West Africa is an attractive destination. The yields are good. Economic reform has been consistent over the last 4 years. And you have the appropriate demographics. So I see West Africa as being very attractive. Is it more attractive than other regions of the world? Some of the other regions of the world have had stability for quite a period of time. But what the current geopolitical environment has taught us is actually economic reform and stability and predictability provides a framework and an environment both for businesses to prosper, and that's what attracts them.
Finally, because my last question, this is the final one actually, but it's really important. We've continued to see increased activity in West Africa's capital markets, particularly in Nigeria, where the stock exchange has gained more than 60% year to date, with the banking sector among the strongest contributors. What, in your view, are some of the factors that's driven this bullish trend?
Economic reform, stability, currency stability as well, and potentially off the back of fairly low activity.
Right. Thank you so much for your time. And Alike, thank you so much. Head of Africa Regions for Corporate and Investment Banking here at Standard Bank. Thank you so much for your time.
Pleasure meeting you. Thank you.